Have you ever looked back at that moment you first heard about trading and realized your entire life shifted in that moment? For me, it started with options. That first time someone explained how you could profit when the market moves, it felt like I had just discovered a secret world. I'm not gonna lie, especially pre-COVID era. It was like the scene in the Matrix. Before Neo wakes up, you're living your life one way, believing everything around you is normal, and then someone shows you something that doesn't fit the rules of the world you thought you knew. That's how trading felt to me. It was a doorway into a reality nobody around me talked about, not even in my family, my friends, not school. It felt like a cheat code. Some backroom access the average person never gets. That's the way this felt. But here's what I didn't understand back then. The real secret to trading isn't strategy. It's not the candlesticks. It's not the broker. It's not the hype. The real secret is the code behind the market. The stuff only professionals, quants, and prop traders take seriously. The stuff nobody teaches beginners. And once you learn it, it literally feels like you're seeing the Matrix for the first time. You can't unsee this. Now let me show you. Just last week on the SPY, right? We can navigate the monthly time frame, case in point, okay? Because this video is what I wish somebody would have told me before I started trading. You understand? So I want you to notice right here on the monthly time frame. Okay, we're going to take off the Heikin-Ashi and we're going to put on the regular candles. All right, I'm going to make sure everybody's with me. You guys can see my screen. All right, let me move it over a little bit. Okay, now what am I trying to show you? So just last week, literally the week I'm recording my videos, I have my YouTube channel and the events that I put out, right? Literally that week, SPY dropped hard and I prepared you for it. People were panicking, overthinking, calling it manipulation. Meanwhile, the entire move was explained, right, by one thing. It was explained by one thing. And what was that? A break of structure on a monthly time frame. You see that? A break of structure here. We have been going up for the past 6 months, right? And we finally have a break of structure here on the monthly time frame. All right, keep it simple and stupid. All right, break of structures are very important when it comes to professional traders. All right, a monthly candle takes 30 days to form. Inside those 30 days, you're going to see noise, chop, range trading, right, back and forth, the illusion. But the monthly structure, that's the truth. That's the code the agents follow. Once you know the bigger map, the rest becomes simple. Now, what kind of trader are you? Are you using a 5-minute, the 15-minute, or 30-minute time frame? Your time frame really defines your entry, your execution, and your risk, and your emotional bandwidth. All right. So now that you understand that, I want you to imagine us, right, zooming in. Let's zoom on in, right? We're zooming into the 1 hour time frame right now, okay? Make sure you guys can see the screen. Hope you've been enjoying so far. If you have, smash that like button, all right? Consider subscribing to the channel. I don't want you guys to miss these valuable videos that I drop. Pass it on to any friends or family that you never knew needed it, all right? Now, right here, we're zooming in, all right? You see? Now, imagine if I showed you 3 levels, okay? Just 3 levels, okay? We're going to use this area here, all right? We're going to use this area here, and we are ranging, okay? Where did I get this area from? We are taking the bottom, price started here and moved up, and of course, this is the top of that range. So price moved from one extreme to the next. That's our range. We have an established range. Okay? These are our levels. The bottom level here, right? This represents 0. All right? Let's go ahead and put the 0. All right? Got your 0%. Okay? Right here's your 0. Okay? In the middle, you have your 50%. Put out 50%. Okay? Okay, we have that, and we also have at the top we have our 100%. Right? If you want to get even more simpler with this, you could just say 1, 2, and 3, as long as you know the contents of the levels. Meaning 0 meaning the beginning stage, 50 is the middle stage, and 100% meaning the end goal, right? Out of a structured area range, you have a floor, a medium, and a ceiling, right? You with me? Stay with me, guys. Now, as I zoom into this and you see the chart, you see the levels we got, you see how we got our range, right? In this example, I want you to ask yourself a question in the very most simplest form. Where's the best entry for the highest risk to reward? I want you guys to take your time and answer that before I get back. All right. This is a group engagement. Go ahead and think about that. Where is the best risk to reward on this chart? All right. Is it the level 1, the level 2, or level 3? You guys, let me know in the comments. All right. 0%, 50%, or 100%. All right. Now, you choose level 1 every time if you wanted to get the best risk to reward. All right. That's my answer, right? For a trade going towards the upside. If you wanted to take a trade going towards the upside, ask yourself a question, right? With the best risk to reward, it was to be to enter into a trade here, to ride the momentum up to the next levels, right? The best risk to reward. Doesn't mean if you took a call right here in the midway section that you couldn't make money. I'm asking that simple question. Which is the best risk to reward? That's the question. If you wanted to trade towards the upside, would you enter into a trade here for the upside based on the contents of the range? I don't think you would. And that's what you need to be thinking about. All right. That's what you need to be thinking about. From 0% to the 50%. That's what you call 2R. That's right. 2R. All right. From 0% to 100%. That's what we call 3R. That's right. 3R. That's the way prop firms and professionals name and target their given targets for price. Okay. R's. Now, that's not prediction. That's not magic. It's structure, guys, logic, and knowing where the reward is highest. Now, let's break that down into actual truths I wish somebody told me. All right. This is truth number 1. Let's back away for a second. All right. And again, I'm Coach UV. I'm with the Unique Trading Group, a company that I started for traders alike, beginners, intermediate, and advanced. All right. And here is where strategy meets mindset and discipline turns into income. Truly. Now, truth number 1 is what I want you guys to understand. The market doesn't move because of indicators. It moves because of liquidity. All right. This is that one truth that I wish somebody told me. It could have saved me years of disappointment. Indicators are like the old matrix code, the green symbols Neo sees before he wakes up. All right. It's really just noise. All right. It's decoration on a chart. It's a shadow of real structure. Now, I'm not saying that it cannot be used. There's probably somebody listening right now like, man, I don't know about that. You know, I use indicators all the time, moving averages. I love the 100 and the 200 day, right? That's all fine and dandy. If it works for you, fine. But for the person that knows there's something deeper, that there's something more, I'm letting you know that right now indicators are lagging. Okay. You want to be the edge. Your personality. All right. You don't want to be the liquidity. You want to use that against other people. That's the real game. All right. The real market moves for one reason. Liquidity. Liquidity is right where retail traders place stop losses, where the majority is trapped, where orders accumulate, where the market makers, the agents, are aiming. Your stop loss is getting hit to the penny, not an accident, a fake out that hits your breakout entry, then reverses instantly. That's not accident, guys. All right. Professionals don't ask what indicators do I use. They ask, where is liquidity building? Where are traders trapped? Where will price go to collect orders? Once you see the liquidity, the market stops fueling, all right, random guesses for you and having you jump every time. You got to see liquidity, all right? It's going to stop feeling random once you do that. It's not going to be random once you see the liquidity. You got to see that, all right? It starts feeling very intentional, and you get this base of intuitive feelings. You understand? Now, that brings me to my second point, all right? The number 2 truth, all right? The number 2 truth about real traders, they do not predict they scale. Now, what we're gonna do is we're gonna hop over to the charts, all right? Because as I'm talking to you, I want you guys to visualize this and understand where we are right now. Okay, I want you to understand where we are. First of all, where's the fear and greed index, right? The fear and greed index, right, is sitting at 11. All right. Most people are afraid right now of extreme fear. And most people who are contrarian, they do the opposite for people, they see this as a time to buy. However, the banks, right, as I informed you guys before on my YouTube channel, I informed you guys that the banks were not buying just yet on the SPY. They weren't buying just right now on the SPY. And so what you have is you have fluctuations in the market, all right, and money is rotating. Right, just a couple weeks ago, last week, all right, these videos here, I prepared you guys for the SPY Insider leak, all right, day trade for a living, and also the NVIDIA earnings squeeze. I explained these things before they happen. So go and check these videos out to catch up, right? So you'll be prepared along with this video to know where we came from and where we're going. And while you at it, anybody who's listening that understands that they want to work on FOMO, fear of missing out, or emotional, right? There's a series I have here called the Discipline Files, all right? This is part 5, I want to say, part 4, part 5. Yes, part 6 actually. And I have a series that started from 1, all right? So go check out the Discipline Files. That link is below to join and subscribe, or you can check out that playlist here on my YouTube channel, the Unique Trading Group, and check out the Discipline Files. It's from a trader called Mark Douglas. He passed away in the 80s and 90s, but he wrote a book called Trading in the Zone and the Disciplined Trader. And so these things helped me along my journey, and I want to extend this to you guys. So thanks for that little piece. I wanted to let you know that. Now, let's get back over here to the chart, all right? Because I want you guys to actually see the liquidity, all right? People are afraid and they're fearful, correct? Correct? I think so, all right? And so what do you see right now on the chart? Let's just say, all right, for instance, we got into a trade right here, all right? You're part of my Discord, you're part of the community, you're watching my videos, you understand risk to reward at the best risk to reward, demand zones, supply, right? Weak supply, strong demand, right? We got in right here and we wanted to ride up because we got in at the best risk to reward, remember, right? So we get in here and we start scaling out. Now we're gonna talk about that a little bit later in the video. Thank you guys for keeping up, all right? This is important. We got into a trade here, and we wanted to scale out here a little bit partially, right? But we knew that our target was 3R. We wanted that at 100%. We wanted the top of that range, right? Here's where liquidity is, right? Liquidity is down here, right here in these areas, right here. Why is that? Look left, because this was a previous demand zone. If this is truly a simulated game based on algorithms and human behavior, right? And we just said we got into the trade here. If we taking our profits at our predetermined level, the market is just resetting back to liquidity, right? Where there was no buyers and sellers in these pockets right here, a gap. Because we wrote it up, we played the game correctly in this casino, right? This auction we trade here. We took our profits and it resets right back to the same demand level that we bought at. A reset. Sell side, liquidity. Get that. Sell where we're selling at our targets because we predefine our entry, our exit, and our risk. Hope you guys are getting this. This is really good stuff. Sell side, liquidity. Liquidity's here. All right. Now, if you scroll over, what do you see now? All right. All right. Could there be buy side and liquidity sitting up here around 684, 682, 675? Possibly. We could be retesting these zones because there are some people who are trapped that bought puts that assume that we could fall. Now, we are bearish overall on the higher time frame, but on the smaller time frame, you get these imbalances and divergences, and so you have to watch for that. The bigger time frame is telling you where price is going and where it wants to do, but you have in between, you have day traders and scalpers, and price is moving differently on a smaller time frame to get the best entry. All right, the best entry for your momentum trades is whenever you wait to find the best risk to reward, understanding the higher time frame. All right, so that's why now you see, okay, the monthly time frame just here on the 25th, that's still part of the month, right? I'm sorry, November 7th, that was still a part of November, even though we're around the 23rd, right around this area, and we still went up. Even though the monthly was looking bearish, right? We had to cool off and retrace previous levels, and that's exactly what we did. There was a previous level here, around 684, 685 were price rejected from already before. And that's a consequence of what you see here because of what happened in the past. Doesn't have to be perfectly right, but it rhymes. You understand? And now we can have the same scenario here, even though we're bearish. That's what I want you guys to pick up on, okay? All right, sell side, liquidity. Buy side, liquidity. Are you guys with me? All right, now the truth. Real traders don't predict they scale, all right? Now, retail tries to be right immediately all the time. This is what you see. Your different forums, Discord chats, Zoom meetings, Google Meets, you hear a lot of mistakes, right? Somebody like me likes to help out these traders. I'm a mentor, so I literally listen to problems from traders and I help them navigate it. Why? Because I have that experience where there's not too many things you can put in front of my face that I just can't tell right off the bat what's going on. And so I like to help out traders to see their true potential, which takes experience and time and practice, all right? That person who desires this is the one that's going to make it, all right? That link's down below to join a thriving community. And if you need a coaching call and a mentor, we are here for you guys, okay? So listen, retail traders, all right, they try to be right immediately. The game is not being right or wrong. It's not about that. It's high probability, your edge. Can you be disciplined enough to stick with it? You need a trading plan. You have to trade with a trading plan. This is a secret. This is unsexy, but it's effective, all right? And it creates consistency when you have that, as long as you are able to bypass the self-sabotaging beliefs, right? And you're able to execute flawlessly when you identify your edge, okay? You got to understand that. Now, you know what the retail traders do. Professionals, they try to be right eventually. That's the difference. Retail tries to be right immediately, but professional thinkers, traders, they try to be right eventually. Most people trade like Neo before he dodged the bullets. Stiff, reactive, unsure, right? But professional traders, they move like Neo after he wakes up. Calm, controlled, placing each entry with precision. Professional likes to scale. They take the first entry when structure confirms, right? They add size on a clean pullback. They add more when the break of structure proves the narrative. One idea, right? One idea, one shared stop, multiple layers of conviction. I say that again. One idea, one shared stop, multiple layers of conviction. Retail wants to nail the perfect entry every time. That's a mistake. Pros build the perfection, all right, by positioning. That's how they build the perfect position. Scaling is the difference between emotional trading and mechanical success. It's a system, not emotional trading. I'm going to get in on a green candle. I'm going to get in on a red candle. I think this is right. I like the moving averages just crossed. I got a call out from a Discord. All right. These are all typical ways to lose if you're not predefining your entry, your exit, and your risk, let alone executing flawlessly. Right. So just think about that, which brings me to another point. All right. Truth number 3, risk management. Now, let's get back over to the charts. All right, now we're still on the 1 hour time frame. Okay, we're still on the 1 hour time frame, but risk management is the real edge, guys. Risk management is the real edge when it comes to trading. Okay, this is a mini course for you, and I hope you guys are enjoying it. Smash that like button. Okay, listen, prop firms have proved this to be right. Risk management is the real edge. All right. If strategy were truly the key, every trader would be rich, including myself. And I am by no means rich, right? Have a rich mind, right? Have a rich concept, have a rich trading plan. All right. But I'm not rich, not wealthy, but I will be. It's a difference. All right. So if I'm not rich, right now, I got to get there, which means I got to be disciplined. And that goes the same for you. Prop firms don't really care about strategy. They care about risk profile. The risk, guys. Professional traders, they're using a one-R system because R removes emotions, all right? No P&L, no profit. A R system. Retail traders, they're trading with dollars in mind, and dollars create fear, greed, and hesitation. You see that on the chart, guys. See how we got above the 21 and rejected at this halfway mark, at the 50% mark? That was fear. That was rushing, right? That was greed. And the market showed that, and we retraced back down here. Now we're in the same area again, all right? waiting for next week open. All right, the time of this recording is 3:15 on the 23rd of November. All right, now what does 1R mean? I want you guys to remember this. I spoke about this with my example with the 0, 50, and 100% earlier, and I told you that I would get to this 1R, and now we are here. So we're going to move this over. Now, just keeping this same range box that we have here. All right, you can see that price kind of went below it a little bit for an extreme. You see that? Okay. Now, here's the R system. If you risk $100 at 1R, let's go ahead and put that on the chart. I want you guys to see that. Okay, 1R is here. Okay, and we also have 2R. Okay, that'll be your midway, your second take profit here, and we have our 3R. Okay, now we have all three of our levels here. Now, if you risk $100 right here at 1R, right, you're risking $100 at 1R. All right, I'm sorry, you're risking $100, right? That's your 1R right here, right? If you risk 1,000, all right, that's your 1R. I don't want you guys to get confused about the R's and the levels. No matter how much money you're spending right here, if you spend it at this level, that's your 1R. You with me? Now, if you make 2R, it means you made twice what you risk. Okay, what does that mean? That means if you risk your 1,000 right here, and it goes to 2R right here, okay, then you just literally made twice what you made. You doubled your money, okay? Right, you're twicing it, right? If you lose 1R, right, that will mean that you will be going back to another predefined level right here. That's where you are. Then you took a controlled risk. You capped your risk right there, all right? But you predefined that. You're capping your risk. That's what you got to do. You see that? This system turns your trading into math and not emotions. A trader with 30 to 40% win rate can still be profitable, guys. That's what you got to understand. You can have a 30 to 40 win rate and still be profitable. But most traders lose because they don't even have a plan, a system. They just enter in, right? They enter in. Let's just keep it in perspective, right? They enter into a trade. The market comes back and they get out before it get a chance to go to where it wants to go to. Okay? All right? I'm serious. Another example is right here. They get into a trade to buy to the upside right here. Nice green candle. Then that turns red and they panic and they get out. This is what's happening. And then we shoot up the following day. All right. This is what you guys got to understand. You still can win if you have a system. All right. 30-40% win rate is not unheard of. It's not unthinkable. All right. It's a win rate that can happen. All right. But it's still profitable. So meanwhile, a trader with an 80% win rate can still blow their account, guys. I'm telling you, they can still do that. So it's not your win rates, it's your relationship with risk. Okay, it's your risk relationship. That's what it's really about, your risk relationship. So this is the part nobody tells beginners. I wish that somebody told me this when I first started trading, but I had to research, I had to study, and I had to get serious about making trading a business because I wanted consistency. I wanted a profitable system that could pay me for a living. All right. I'm telling you, this is one of the most important truths in trading. Now, this brings me to another segue, right? Truth number 4. Losing isn't failure. Losing is data, right? Losing is data. And I'll tell you why, all right? This thing we call trading, right? It's very it's a funny thing, right? I just want you to think about this. Somebody who trades, they trade, they're new, right? They lose and they say things like, I'm not good enough, I need a new strategy, I'm doing something wrong. When professional traders lose, we say, good, the system is working, right? Because losing isn't failure, it's just data, all right? The system is working. That's what us professionals say, all right? Because in a real system, losses are expected. Losses are healthy. Losses are part of the math. Prop traders expect losing days, all right? I always expect losing days, but I cap my risk. I cap my losses, and I know what that is. That's the difference, all right? When I say that, I'm expecting losing days, that could be losing streaks, days where nothing works, the market is not going in the favor of your, the trade that you like to take, your setup like you like to see, that means you sit out, right? Sometimes the best trade is no trade, or you find a way to attack the chart, but you got to know the context. You got to know your levels always. I'm talking about even days where your entries don't trigger, or days where they get chopped, all right? We all have these days, all right? But to a professional, a loss is not emotional, it's informational. Every loss is a feedback. Every win is reinforcement. And every streak is part of the statistical curve. You're learning something, you're gaining data. It's going to help you if you don't give up, all right? Which brings me to a very interesting segue again, guys, which is market structure plus execution equals consistency. That's why I named this group the Unique Trading Group, where strategy meets mindset and discipline turns into income. That's why. Now, market structure. Let's get over to the charts again, all right? Got our culprit, SPY, all right? We're seeing the chart in front of us. Now, let's examine this. Let's go over this. Market structure plus execution equals consistency, all right? Market structure is code, all right? It's code. Now, we're going to take this off, all right? Let's take off this. All of these drawings, okay? And we're going to get to some markups that I had on my chart already. Let's see how fast we can get to that. Okay. And there we are. Okay. All right. Now, thank you guys for your patience as I navigate this screen. Now, you see the monthly time frame. You see the breaker structure that we talked about. All right. You see the breaker structure here. All right. You see your breaker structure. Okay. Now, execution is how well you move through it. Right. Most traders have decent strategies, but terrible execution. That's just truth. All right. The execution just not there. All right. What does execution mean? All right. Execution means following your rules, respecting your stop, entering where R is optimal, scaling when structure confirms, avoiding FOMO, avoiding emotional trades, making decisions based on data, not feelings. Okay, and we're gonna do that again. Okay. All right, 1 second here. I want you guys to see this. You guys will be able to actually put this down. Okay. All right, following your rules, right? You also want to respect your stop. So respect your stop. Okay. You also want to enter where R is optimal. All right. You also want to keep in mind scaling when structure confirms. Okay. You guys can get a screenshot or write this down as you're actually with me. Just want you guys to see everything and make sure that it's clear. Okay. Avoiding FOMO. Fear of missing out is a big thing. Okay. And fear of missing out, one way to navigate that is predefining your risk, entry, and your exit. Practice that, right? Practice that and let it be a part of your trading nature. All right. Another one is, which is important, right? Everybody's familiar with this one. Avoiding emotional trades. All right. And also making decisions based on data and not feelings. All right. This is what I want you guys to get. Okay. Now you could take this and you could copy it, screenshot it, whatever you need to do, but it's right there for you. Okay. Wanted you guys to just get that. Now, consistency, it's not built from predictions. It's built from behavior. And in front of you is a chart full of human behavior. Okay. It's full of human behavior. All right. And you could clearly see that, right? Back and forth, right? Buying and selling, fear and greed. Okay. Now I'm going to remove this. Okay. You guys can keep it up here if you want. but I'm going to be taking this away, clear up the charts. Okay. Now, this is a thing where, you know, if you're really going off of emotions, it's going to be really hard for you. But if you focus on behavior, meaning structure plus execution, that's what professional trading looks like. All right. You want to master that way of trading. That's what changes everything. Okay. The real blueprint is really the real blueprint. All right. If you really want to know how to really spot opportunity, just using a monthly time frame with a break of structure here is break of structure, right? The last time on a monthly time frame when we broke structure, all right, the last break of structure was, let's just say here, okay? We had that break of structure. This candle broke structure. We still ranged. We didn't quite get below, right? We ranged for a month or two, okay? But that next month we broke that structure and we end up falling a couple points down, 20, 30 points. All right. So that's what we got. And what do we have here? The same thing right here in current time where we have a break of structure here. We have a break of structure here, right? We are still ranging, same as the other one, right? We're still ranging. All right. Could we get that same 2 months? Like we did here, well, which is actually more than 2 months that it ranged, but when it broke the structure, it ranged for an additional 2 months before we seen anything. All right, we are far away from the 21 right here. We do have these gaps to the downside around 600. The quarterly time frame on the ATR is telling me that we can reach 600, but I don't want to chase. I don't want to be the one chasing. I want to wait for the perfect pullback. And so what we're waiting for next week is to see the high, the low, and the midway point of this monthly candle. We want to see those ranges work. Now I'm going to remove this here, and I'm going to be closing this video soon, but I have something really special for you guys right now to watch. And if you can get this system and remember that you had this video to watch before the market opens, it will help you. All right, it's going to help you context entries, exits, right, to understand what's really going on. I'm giving away this for free for the community. All right, hope you guys are enjoying. Now this is what you should do. We're going to use 3 elementary lines, right? We're gonna have a red line, we're gonna have a green line, and a yellow line. What do these lines represent? All right, well, this horizontal red line that you see right at the top, all right, it comes from the top of the range. All right, we have a candle here, this candle here, all right, it has a high, a low, a open, and a close. We're going to be focusing on the high, the low, and the midway point. All right, that's what we're going to be focusing on. So that red is resistance. Why? Because price fell from there already. Okay, now our next area of interest is going to be our midway point, right? It's going to be the halfway midway point of the current monthly candle, this red candle here. All right, and last but not least, our third green line is going to be the green line on the bottom, which represents demand of this candle, all right, where price bounced from. So what do we have? We have a classic stoplight, traffic light type thing, right? Green light, yellow light, red light. You see that? Okay, green is for go, yellow for slow down, red for stop completely, all right? The mission is complete. That's what it stands for. Now, on the monthly time frame, watch closely. I said that you're going to be able to use this system to get your optimal trades. Now, remember, the 21 is all the way down here. All right, a regression trade means that price is trying to revert back to the moving average. All right, revert back to where it broke out from. Okay, have we got that yet? No, but do we see signs of that? Yes. How do you see even more and get a more precise trade based on this whole video that we just talked about? You take the monthly, understanding that we have how many days left? About a week or so left in a month. So we got a week or so left of chopping back and forth before we get a big move to see what's happening inside that range. So we take this monthly time frame and we go to the weekly because that's the next in line. Monthly, weekly, daily. But watch the chart, guys, and see the green, yellow, and red line and where it's going to be positioned as opposed to the monthly candle and that 21 and the gap in between here, which is right in between here. Now we're going to throw our volume profile up here. All right. Now we see our pockets and our thin zones. Now let's quickly move to the daily. You want to see all these same things on a daily chart to get the context to see where we are. Quickly, there we go. We just changed. All right, move it over. Stay with me. Now what do we have? You see everything the same. Okay, we got the point of control right here. Okay. Look at that. We got our green, our yellow, and our red line. Are we oversold? Are we overbought on a daily? Do you like the setup? Is this your time frame you like to trade because you see the system? All right, is that the one for you? Are we at a demand level? Is there a thin zone here? A cluster where it's thin volume? All right, could we fall even more? You gotta wait on your context. If you wanted to short the market, right? This goes back to our system, 0, 50, 100, 1R, 2R, 3R. If you wanted to short, where's the best way to short, right? We could fall here and crater down here. Absolutely, right? But just in the realm of trading, doing this for years, right? Thinking about being a rookie or somebody who's been seasonally trading for a long time, the best risk to reward for puts will be up here, not there. Rookies chase, the same thing happened here. I want to buy a put because it looks good. That already happened before, and you see they got toasted. This is one of the reasons why price happens this way. The market is waiting for dumb money, retail traders to FOMO in, right? And to do stupid trades and to get caught. We are a little bit oversold. We still need to wait for context. We need to get over the closing price on SPY. All right. The closing price on SPY is, let's see. All right. Because you want to find the best trade setup based on our system that I'm giving you. And you see that. You see everything we put there, right? You can see that context, how these lines transfer to a different time frame. Time frame continuity. The daily might not be for you. We're going to toggle over to the 4-hour, and we're going to see if that 4-hour setup is better than the daily. What we're doing is establishing what time frame is going to be the best entry for us and what we need to wait on based on the context. All right? So the SPY closed at 659. That's right. 659.03. Okay. You want to see price get above here for us to be bullish. Okay. That's what you want to see. Above this price for bullish momentum towards the upside. All right. You want to see that. All right. 660 and 659.03 are like the levels of demand where if we can hold there at that demand and get over the point of control at 659, which is where that is, literally the closing price in the point of control is at 659. We can see some quick prices again back up to 669. That's a $10 move, all right? Okay, 1R to 2R. Think about this, all right? Understanding that we have this overhead resistance that can still knock us down because we are overall bearish on the monthly time frame. And so your risk to reward is right there. You got to understand that, all right? Could it continue to run? Yes. But who cares? You already made a $5, $10 move. Leave a runner if you really want to be in there. But don't risk the money you already made. Use their money that you got paid from, all right? Keep your profit and what you risk. Now, let's go ahead and toggle over to the 4-hour. And we are breaking it down, guys. Hope you're enjoying this video. We're going to be wrapping up soon. Thanks for watching, right? Look on the 4-hour time frame. What do we have? All right. Are we oversold? Are we overbought? All right. Where are we on the spectrum? We are at the demand zone of our monthly price movement range. That's that green, yellow light, and red light. Okay. You see that? Now imagine getting into a trade at the demand zone, right? Our risk to reward, all right, criteria, right? And yellow light. What happens at a yellow light and a traffic light while you're driving? Do people slow down or speed up? They do both, right? In this case, we're trading, so you see how price slows down. This is for the context for the example of the traffic light and how you can use it to get out, to understand conceptually. I'm buying at a demand zone. I'm slowing down at yellow, taking some profit, right? The perfect pullback that we talked about, if you missed the entry and you want to get in, will be at the 21. All right. Why? Because that creates your higher low. See that, guys? Come on, man. Really not that hard, okay? Wait for the perfect pullback when everybody's panicking and chasing, and you buy that, all right? Remember that third time's a charm. 1, 2, 3. ATM sound. All right, guys. Hope you've been getting it so far, all right? Do you like the 4-hour time frame? Do you like that setup? I like to buy above the 21. Above the 21 is at 666. But hey, if price gets to 666, it has to leave from the closing price. So that's a $6 spread, $5 spread, all right? Now let's get to the hour. Let's see if it looks any better. Okay. It's all right. Okay, it's all right. Price is a little below the 21. We hasn't quite got above there. That point of control is still serving. 659 is still serving as a place. I think you guys are getting some context on where the best trades are. Let's go to the 30-minute, and we're going to be wrapping up. All right, 30-minute. All right, we have some bullish divergence. All right, so intraday could be pretty volatile. All right, I'm looking for a retest of these highs. All right, and for people to immaturely chase. All right, depending on the data and the volume. If we get increasing volume, I will be looking to continue to trade to reach these highs in this pendulum swing, which we are trying to. All right, the bulls are trying to rotate back up to our third R, our 3R, our R3, 100% mark. You guys with me? You get that? I hope you guys have been so far, okay? Listen, that's what we are looking for next week on SPY. All right? And just to let you guys know, this video is always going to be here for you if you ever need it. You don't have to worry about or panic at all. It's going to be here for you to look at and share with anybody if anything was too much for you. Give yourself some grace and come back to this video if it served you purpose and you really want to soak it in, okay? If this video already gave you more clarity than most trading courses, then good. That's my intention, to give you the truth I wish somebody gave me when I started. But understand, everything I shared today is just 10-20% of the real system. The institutional blueprint, the full version, that's where everything connects. Liquidity, structure, execution, risk, narrative, timing, and position building. If you go deeper, you'll be learning to trade the way professionals trade, the way I teach my mentees to trade inside of the Discord, right? To really see the tricks that retail falls into, to see the traps that Wall Street sets. It's not about somebody, the Illuminati, or some big bad monster, bad guy who's trying to get you. The charts can't move unless you click the button, guys. Remember that. It's really about psychology. What are you doing, okay? Switch your mindset from being a victim and be the person who preys on the best opportunities, all right? That's where your edge is going to lie at, all right? And executing flawlessly, all right? The way that the agents see the market and the way that Neo reads the code, all right? You need to know that. But even if all of this you're taking from me, this right here, even if this is all you ever take from me, you now understand something most traders never realize. You don't win this game by predicting the market. You win it by understanding the code behind it. What's really happening? How can I position myself? And once you do, you don't just trade better. You move differently through the game. You stay in the game. Consistency. Appreciate you guys watching. Let's grow together, man. And I'll see you in the next one. All right. You guys be blessed out there. Till the next time. Peace.